Hey everyone, let's take a look at creating a pro forma income statement. So we have our previous year, our completed net income statement or an income statement of 2013. We just have to figure out the percentages as a relation to sales. And we've been given an expected growth rate of 4.27839%. So based off of these two pieces of information, we should be able to create a projected income statement for 2014. So first, let's write down what we do know, okay? And ultimately, we're just going to be recreating an income statement. They've given us most of the information, and we just have to figure out what each line represents in a percent of sales. So as regards to sales revenue as a percent of sales revenue, we're simply going to divide it by itself. Okay, so it should also, I would hope it would be 100%. Okay, and I mean we can always drop this down, but we'll go through a couple just so we get it. Okay, so in other words, as a percent of sales, sales is 100%. So next we want to determine what is the cost of goods sold as a percent of sales. Looks like 34%. One thing we do have to remember though is we need to round to 3 decimal places. So right now we're not rounded, we don't have any decimal places. So we'll make sure we're at 3 decimal places. Okay, we'll do a couple more examples and hopefully we kind of get the picture. So again, what is our selling general and administrative expense as a percent of our sales? Well, we're going to divide it by sales, and here we have it. So once we've kind of figured that out, we can bring that down. Of course, remember that we keep this as an absolute cell reference, the denominator there. Okay, so we should have that for us. Clean it up a little, keep the percentages not so bad. So we can punch those in. Okay, so again, 100%, and let's make sure we get those in there. You never know. Right, so we'll punch these all in, and we're going to have to check when we punch them all. 24. Let's go 0.913. Our tax income. And finally, our net income, 293. That may be considered return on net income. So let's check. Okay, good, that looks good. So next thing we need to do is figure out what do we forecast for our 2014. Well, if you remember from our previous questions, we're using that growth rate method, okay? So we only have, they've given us actually the sales growth rate, okay? So so that G rate, growth rate, I'll put it here. Okay, so we know it is 4 point, let's make sure it's in a percent form, or a decimal form at least, 472. The hardest thing is not punching in these wrong names or numbers incorrectly. We can get that into a percent if we'd like. Okay, so we're going to take that, and again, if we know our sales from the previous year, okay, we're going to take the sales and we're going to apply that 4.7% growth rate. So we're going to multiply by 1 plus the rate. Okay, wonderful. So that's going to be our new projected sales for 2014. So with that, and with the knowledge of the percent of sales for all the other factors or categories, we should be able to figure out what our pro forma income statement will be. Okay, so let's take a look at that. Again, we're just going to copy another income statement and fill it in. Now we have the percentages, so we're going to use those percentages because those are not going to change. Okay, so we can literally just take these over from here and bring them down. Okay, just clean it up a little. There we go. Wonderful. So we have the percentages and we have the sales. So we know the sales is going to be here. Okay. So now we can simply do the math. Okay, so we know that 33%, 34% basically is going to be our total sales is going to be our cost of goods sold. And we can we can do a couple more like that. Okay, so again, we take our sales, we know that 31%, so forth, is going to be our selling general. Again, now we know 9%, give or take, is going to be depreciation. And basically you can see there's there should be the same identical growth. Okay, so earnings before tax. I'm gonna have to decline that call right now. Sorry about that. Okay. And let's finish up. Interest. Of course, we are using Excel. If you want to accelerate the calculations, you're welcome to do that, but we're just going to take our time here. So again, we figured out the percent of sales, and that's going to allow us to figure out our pro forma income statement. Okay, so let's get back to the actual question. What is the sales forecast of 2014? Well, that's going to be the number that we projected based off of our sales growth rate. 974.5. Oh, and they want to the nearest dollar. So actually, you know what? Let's make sure we do that. It's going to go up one. Perfect. Okay. So yeah, always make sure we get our rounding correct. Okay. So now they want us to fill this out. Hopefully we've done that. And again, they want to the nearest dollar. So let's again make sure we round properly. Okay. So same number that we projected. And again, we have to punch them all in. So much suspense this way. So yeah, it can be quite stressful, but that's okay. We're all in it together. Appreciation. Okay. And there is a bit of a tolerance, so sometimes you might experience some difference in numbers, but they always do a good job being tolerant. It's a very nice program. Let's see if they're tolerant with our answers. Oh boy, here we go. Let's check. Okay, wonderful. Thanks for watching and happy financing.